Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, we're going to do a brief market update, having a look at a series of Bitcoin charts and maybe a few other things, and just basically discuss where we are currently and maybe where we could go next, and discuss a few other things about what's going on in the market. So let's get into this one, shall we? Okay, so it's been a little bit since I've done one of these, but I look at these charts every day, and I've been posting on X when I have updates. They're usually, a lot of the time, I can cover a lot of this stuff within just a quick post on there. So I haven't really been doing too many videos regarding my charts, but I figure why not have a quick look and see and show you what I look at every day when I'm basically analyzing the market and seeing, where we could go next, and, key supports, resistances, and all that sort of stuff. So let's jump in. So like nearly every one of these videos, I will start on the 1 week Bitcoin chart. So this chart has the SMA VWAP bands, which I covered in a video several months ago, which was one of the indicators that I used to pick the bottom from last year. And also in that video, I discussed what could happen if we followed what happened in 2019 using the SMA VWAP bands. And just to remind you, 2019 did the exact same thing where it came down to the bottom of the SMA VWAP bands, and then we went to the top of the SMA VWAP band. So if you have a look here, we actually got to the middle tier or line of the lower band, and then we bounced off the 200 period, and then we started to recover from there, where we made our way to the top of the SMA VWAP bands, and we rejected from there, came back to the 200, and again, that's when we touched the bottom of the SMA VWAP bands. So in that video, I speculated that there's a good chance that we could do something very similar, and we haven't quite got there yet, but we've almost got our first touch, which currently is sitting at around 47,000. Now the top of the bands, for reference, is about 55,700, and the middle is 51.7 or thereabouts, and that changes every week roughly. You can say it's pretty smooth. And just to remind you, these are the smooth moving average VWAP bands. So this is a very specific band, but using backtesting, I noticed that this worked really well in the past 3 cycles. So with regards to that, those are our current key levels above, and there's a good chance that maybe with a spot Bitcoin ETF getting past, not the fake news that we got yesterday that dumped the market, but the actual passing of the spot Bitcoin ETF, which, to be honest, I think it's a certainty at this point. It's just a matter of when. Getting up to some of these levels is completely plausible. Now, you might be wondering what this is on the screen here. I made a market analysis video back in Jan, and I put this on the chart back then. Now, this was my 2023 to 2024 bull case target. At the time, I just had it as 2023 because I wasn't sure that we would actually even be able to get there this year. But guess what? We did. So I'm going to revert this back to what it looked like in the video, because that's what it looked like in the video. And if you want to know what that is, that's just basically this order block here. So you had a support here, it was resistance and support many times. So that's what that was. That was just to try and get into this order block, essentially, because there was a lot of buying that was happening around here for those who didn't believe that the bear market was in yet, and they thought that we were still in the bull market. But you could see we lost the band. We tried to get above it, we lost the band, and we were rejected right there on the first touch. So, we were rejected several times there, but that's fine. So that's what these targets are above. So we've met the 2023 bull case target. So I'm going to pull that one in, and that is a tick. We definitely got that one correct. So that was all good. And so what could be next? Now, my expectation, I suppose, is in a few days' time when we're looking to get maybe the news on the spot Bitcoin ETF that we might get another pump up, but we'll have to see. It could be a sell the news event. So we have to be very careful of that, because big money will want to get in at lower prices. So that could be something that we need to be wary of. And well, big money's probably been getting in this whole time, to be honest, but it's something where there's pretty good chance that we might visit some lower levels before we really get to some of these more price discovery levels. So, we might do something like this for a little bit, then we might get that spot Bitcoin ETF approved, hit the middle band or something like that, and then start our pre-halving sort of move down and then basically find a base. We go even lower than that and then we start rocketing off. So that something like that could be a scenario that could play out. Let's have a look at our supports below. So we've definitely got this area now as a key support, so 32k. I think breaking 32k at this point is going to be very, very, very difficult. So bears would have a very hard time getting it lower than that, but who knows? There could be something crazy, the second scare or something to that effect. We could get a recession finally announced in America. This is an election year in the US though, so I think things like that would probably want to be suppressed, because that kind of news would really shake sentiment, and you know, with regards to all the election cycle stuff, it would probably be pretty bearish for the current party in office. So I'm not so sure that they will officially announce a recession. You know, they moved the goalposts, so at this point they don't even need to announce it, even if we probably are with regards to other key metrics. But I'm not going to go into that stuff because you can find plenty of other channels out there that go on about that stuff. I just want to look at crypto kind of in isolation. I know it's not in isolation, it does actually matter. All the other stuff that goes on in the world definitely matters, but at least we can have a look and see, you know, because America doesn't drive the entire market. We've got Asia that drives that is a big player in the market these days. And to be honest, I think, you know, even with Hong Kong fast tracking all of their ETF stuff and all that sort of thing, you'll have this massive influx of money coming in from mainland China into ETFs and all that sort of stuff, all these products that start up in Hong Kong, and they won't care at all about what is going on in America, most likely. So the levels we have below definitely is at 32k. We also have the 20 and 21 moving average band here, which is slowly coming up with time, sitting at around 35,000 and about 33,000 roughly, respectively. And the 200 week simple moving average is sitting at around 30k. So we've got this big cluster of support here essentially, and I think that these levels are pretty solid and would be very difficult to break, in all honesty. And if we did come down again, you know, we've still got the potential for, if we did come down even further and break these levels again, which I think is unlikely, but it's definitely possible, then we have the same old band that we had before down here. I think that anything under 17.5 is just never going to happen ever again, but you know, never say never. That's just kind of what my thinking is, that this is just this band ever since it started printing on the chart has been the absolute bottom of every market. So that's why I believe that that's pretty much what we're going to get from here on out, until proven otherwise, of course. So now we're going to get into the cumulative volume index chart for Bitcoin, and that's, well, I use also the stochastic heat map as well on this one, but you can see that these are the trades that I've been taking on the 12-hour, and I've been using Jupiter for these ones, and I got this one just in time. To be honest, this actually moved really quickly, like down like really fast, so it was very hard to catch, and I did post on X the chart, but yeah, sorry if anyone's following this. I don't think that anyone is, but if you are, then I didn't really get a chance to post this in time. Usually there's plenty of time to act whenever there's a signal. So for example, you know, I took a long here and added to it on the 21 smooth moving average, and like it was pretty large position there, and then added a little bit more down here, and so it actually, my position was only around there, which, you know, I started using Jupiter for this strategy, and I covered this strategy quite a few videos ago now. But anyway, that just uses the cumulative volume index, and it detected a short opportunity, which has almost completely retraced back to my entry. So, but you can see here, I use this 21 smooth moving average here as well as sort of a key level, and we're about to close above it, which is pretty bullish, to be honest. So at least in the short term, this wick here, this fact that this was bought up to this degree is actually quite bullish. And so this short here, I'm going to keep my stop loss pretty tight. I'm probably going to stop out around 45,000. So that's probably where that is where my stop loss currently is. And if I see that this is just going to, maybe if this just tracks sideways and then maybe takes another leg down and refills this wick, then I guess that's fine, and I don't mind, and then I'll start to move my stop loss to entry. But for the most part, that's what I've got at the moment. CBI is still in sort of overheated zone, so I'm kind of happy to hold this short, in all honesty, as long as I feel that it can still sort of potentially go down further. We have been really overheated for some time, right? I mean, look at this. The stochastic heat map was printing really dark red candles here, hitting bands up in the top here that we haven't seen for quite some time. So the last time we hit this top band here, which is where when we hit 45K, was back in the bull market. So, I mean, that probably puts some things into perspective. It was really, really overheated. And we have a couple more bands that we could have got to still, but that's like proper bull market. That's like raging bull market territory. So getting a pullback from here seems like a very natural and organic and probably healthy thing to do within the market. And you could still say this is bullish, especially with this kind of wick here. So a little correction from here probably wasn't too much of a big deal. We actually haven't even got a close really outside of this wedge. So we broke out of this wedge, faked out, came back down. We couldn't even get down below it. We're closing back inside. So we're still coming into this pattern here. So it's pretty neutral, to be honest. I mean, we're bullish because of market structure, but in terms of being overheated and putting in divergences, well, yeah, that's where we're kind of looking a little bit more bearish. So it's pretty neutral if I'm honest. So the other thing that we had, which was showing us that we were pretty frothy in the market in terms of just how much leverage was in the system. We had about 4.3 billion in aggregated, and that's only across a few markets. So we'll have a quick look at the markets this is looking at, and you can look at other open interest as well that has got more aggregated, but this is just looking at a few markets. It's looking at Binance, BitMEX, and Kraken. Honestly, I think this probably should have BitGet and probably a few others as well, and OKX, but it's still a good rule of thumb for looking at just how much leverage has been wiped out. So you can see these big red candles here. That means that it's a really high amount of leverage that is being wiped out. So there's open interest. And you can see the liquidity here. We took out several key levels and we've now put in a few new ones. Look at this cluster here, 20K worth of volume right here in this wick, right on this candle here. And that's a 1 hour candle, which is pretty insane. So now that's a new massive liquidity pocket. So if we look above, we've got much less liquidity than below. So I mean, look at this ladder. There's just all of these key levels that have all been printed from past price action. But at least just with regards to this open interest chart, which just looks insane, doesn't it? Look at that, just absolutely insane. This was about 1 billion wiped out. So that's 800 million wiped out in a very short period of time. There you go, 287 million in wrecked longs. So pretty intense, right? Pretty intense. The longs just got way too aggressive, not really any shorts to match it, and then bang, there we go, fall straight through the floor. Probably with a bit of news or something to that effect, more so market makers. It happened in the UK session, so it happened towards the end of the UK session, and the US didn't really do much about that. They bought it up a little bit, was sold off, and then we're now just tracking sideways, which, to be honest, that kind of invalidates a V-shaped recovery, but this could still look like what Bitcoin does, which is ranges a lot anyway. So this could just be like snapping back into a range essentially. So we'll have to see what happens. We'll look for more structure, but this is a slight bullish pattern. You've got a low and then you've gone up and then you've put in a higher low. So that could technically be a short-term long signal if that's the sort of game that you like to play. I'll let you make a choice on what to do with regards to that. Next up, we're going to look at RSIs and stochastics. Now, we can see here on the RSI down the bottom, we had just a whole bunch of bearish divergences printing this whole time, but also to match it, we had a whole bunch of hidden bullish divergences as well. So that makes it really hard to gauge where we actually are, because when you think about it, hidden bullish divergences generally in a trend are a lot stronger than bearish divergences. Well, that's what they say anyway, but I still consider bearish divergences to be really strong and something that you really can't fade. So we had all the way up here, we had strength fading more and more and more, and then our all-time high for the year is all the way down here. So that's your 45, almost 46K right there, right? Look at that. It's really nothing. It did barely printed on the RSI. So it's not really that positive. And the other thing as well is that this is the weekly stochastic, and I went long off the last weekly stochastic. If you have a look down here, that was down here. There was actually a few other reasons why I went long as well, but that was the weekly stochastic down there. That was also a CVI buy signal as well, and then I added more to my position as soon as this flipped blue, which this is it's a PSAR, essentially a parabolic SAR, stop and reversal, and I just use it as confirmation. I don't trade it verbatim. but it's just another thing that sort of added to that. And yeah, so we had a top here, there you go, red print, bottom here. We also had a top print there. So you can see that it works pretty well, the weekly stochastic crossovers. And we definitely had one of those, you can quite clearly see. And we've got more CVI top signals. And we didn't quite get to this resistance here that I had printed on the chart. And that was nothing I was really going to trade off of, but that's like your 47 to 48K sort of region. That's another key level that we could very easily come to very soon. And even if we get like a correction from here, we actually bounce very aggressively off the 50-day simple moving average, which is quite bullish, to be honest. And we also have support here that's now been established with around 39K. And then you've got a dual support here, which again, these are all created from past price action. And then there's our 200 period simple moving average down below, which coincides with another level, and that's the 32, which I discussed a few charts ago. So we're still in a bullish trend. You know, we've still got a blue trend meter down here, so that's fine. But you know, this did flip bearish in the short term, but again, the PSAR, this particular PSAR is more of a confluence PSAR, because I mean, if you shorted there, that would be fine. If you long, kind of, but you know, then that's kind of a losing trade technically. Long there, it's just a lot of sideways there. So I mean, and you get signals like this, right, where you get, you know, a bearish cross, it goes down and then comes back up to a losing trade. So that's why I don't really trade the PSAR on Bitcoin like this, but I do like sort of how it looks, and I like confluence and all that sort of stuff. You can see this channel as well, which I will show by hiding the indicators, so you can just see drawings. You got this channel here, which we broke down below when things were looking quite bearish. And then when we broke out above that, and then we snapped back into the channel, and we've come up to the top of it, rejected from the top once more, ranged sideways, hit the top of the channel once again, and then we've come back into the middle band. So this channel here, if you're wondering what this actually was printing from the start of the year. So we'll just zoom that one out, and you can see this is where the channel started. And then we went up and up and up and up. And we were doing 50% retraces on the way up. So when I say that, I mean, if you look at Fibonacci's here, we went up to a level, then we from here measured from the bottom here to the top here, we did a 50% retrace, up 50% retrace, up. This one didn't do a 50% retrace. So based on this structure here, what would a 50% retrace look like if you were to measure from the bottom here to the top and get rid of all of this other stuff, because we don't really need that. Okay, so we'll just measure that once again. So that's our top roughly. We'll just get the magnet on there so I can snap that right into place. There we go. And I think that's probably around the low there. There's a little fake out there. So a 50% retrace on this structure here, it's a pretty big structure. This is quite a move, to be honest. That's your Santa Claus rally right there. But the 50% retrace here would come to about 35,000. So there's another key level to watch. That also coincides with the bottom of this channel. So maybe we come down here, maybe we revisit here or something like that, you know, consolidate for a bit, find a floor, and then maybe we go to our next higher level. But yeah, time will definitely tell on that one, but that's our 50% level for this structure. So if you're thinking that, you know, we're just going to keep doing 50% retraces, which we could do, we didn't really do it here, but we could do, then that's sort of your 50% level for this structure right here. The last thing I wanted to look at with regards to just the Tradingview charts is the 3-day chart for Bitcoin. And again, this one has a channel which we haven't got to yet, the middle channel, which this is a very, very, very old channel. This goes back to the very start of Bitcoin's price action, and it's followed it almost to a T. So again, this was another reason why I picked the bottom last year. Go back and watch my videos there. I basically posted this and I was like, we're touching the bottom of this channel. And this I drew back in 2019. So this is a very old channel. It's a logarithmic regression channel. And you can see that at the moment, the mid band or the mid level, which you can see acted as support there, is currently sitting at around $50,000. So we could definitely visit that area again. We will have to see. But we also have a few TDSS 9 tops. So this one was not really respected and completely ignored, as you can see. But this one is probably not too bad, I suppose, but we did kind of get a little bit above that structure before we were rejected from this area as well. The 3-day candle looks to be misprinting, so we can't actually even see the 45K there on this chart. So that's actually where we got to on this candle, but nevertheless, that's kind of where we're at with the 3-day chart. We've got a CVI cumulative volume index top and a TDSS9 both stacked on top of each other. So this structure here, if we can hold around here, then that's fine. That's still bullish. It's even still bullish, to be honest, above 32K. To be honest, a pullback to 32K wouldn't be that big a deal, and it would probably be pretty healthy because we haven't really had a pullback since July, that's 6 months ago. So that was the last time we actually got a proper pullback. We haven't actually had anything since then. So I don't know, that might be a little bit unhealthy. So it's probably for the best that we are where we are right now. Having a look at the Kynomatix chart, we can see one of the big reasons why we had a big dump as well. So you could equate it to news if you really want to, but have a look at this. We got aggregated funding rate almost up to 0.1, which is insane. Really, really, really high. And again, we haven't had a funding rate that high. Well, last time we had a funding rate this high was back in November on the 9th. I think that may have been the false news on the ETF. I'm not really sure, but there was that article in one of the crypto news sites that said there was an ETF, and then with this big spike, and then it just basically consolidated for ages after that. So we did get a big spike in aggregated funding rate back in November, admittedly, but in terms of liquidations and all that sort of stuff, look at this cascade right here, huge spike to the downside on that. And we had a brief period of negative funding rate, which means that a lot of longs were wiped out of the market. And if we have a look here, if we zoom out and we look at the volume profile on the side here, right here is a resistance. That's our strongest point of volume on the chart. So we'll have a lot of underwater positions here that we'll probably want to be exiting there. So that's a resistance at this point, and that's sitting at around 43,700 with supports on the volume profiles sitting at around, this probably is the point of control for around here. Let's have a look back a little bit. Yeah, so around here, you could say is a support for the volume profile. So that's another key sort of area to look at, I suppose, as well. But yeah, this sort of extreme high funding rate, generally that's just a little bit too heated in the market. There's just too much leverage in the system, and that's when your market makers look at finding ways to pull the pin to just flush all that out essentially and reset everything back to zero essentially, which is where we are right now. So that's pretty healthy. It's not healthy for people who got liquidated, unfortunately, but that's kind of how this market works. And the last chart that I wanted to cover was the AgroTrade chart, and we can see liquidations on there as well. If I just bring that up on the side here, so we can see it actually isn't our biggest liquidation event. I mean, that was the biggest one there, but it's definitely one of the bigger ones for this year. So we had that one there on November. Apparently, it's a lot of liquidations in November. The price didn't really do much there. But you can see we've been stuck above the SMA VWAP bands for quite some time now. So we can see in terms of liquidations, it actually wasn't that big of a liquidation cascade, not compared to what we got back in August. So back in August, that was after a slow bleed down. So we touched the top of the bands here, and then we slowly bled down, and then we just cascaded down, and we went down below the middle band, and then we kind of were tapping on it to try and break it back above. And then we got that ETF news, that was the fake ETF news that came out, but that got us back above the mid band, which was enough to push us up, and then we even broke the top band, which is crazy. So this liquidation cascade wasn't even that big. It was very comparable to previous leverage flushes. So we had that one there on the 14th of November, and we had another one on the 11th of December. So this is just sort of a normal thing. This actually isn't crazy. This isn't too crazy, to be honest. It might look crazy when you're looking at it, you know, on lower time frames and all that sort of stuff, but it's not really that crazy, to be honest. But we have finally got ourselves back into below the SMA VWAP bands, essentially. So at this point here, when Bitcoin went to just under 45K, or actually, I think it hit 45K around here. But yeah, that was where we were very overheated. Look at the stochastic heat map down there. That's crazy. If you see this dark red here, that's a sign that things are really overheated. And we haven't seen anything like that since the top of the bull market. So 2021, that's when we saw stuff like this. But all year, we haven't really had anything that crazy, to be honest. So there's a bit of a mean reversion here. It's kind of got to pull back in and collect itself. Now, in terms of, you know, what if we just got sort of track here sideways or whatever, and then start to sort of come down? If we were just to use the middle of the SMA VWAP bands, again, that's sitting at around 32. So we're seeing a lot of confluence for 33, 32, 35K as a potential pullback zone. And I think below that, I don't know if we're gonna probably get down below that again unless there's something really big that happens, but there's definitely a chance that could happen. And you know, if something big enough happens that really shakes market sentiment, then yeah, we could definitely come down below there again. And the bottom of the bands at the moment sitting at 21,000, but yeah, I think that this is probably a very key level. And if we do get a proper pullback, which we haven't yet, this is not a proper pullback. This is just a rejection and a flush of the system. But if we get a proper pullback, then I think that's our target, to be honest. And that's where you'd want to be loading up big time on Bitcoin. And if we get down below that, that's fine, because, you know, the upside in the long term is still very positive. And, you know, if you can snag some Bitcoin around those levels, then that's really nice, because it's pretty much been expensive ever since like 40K essentially. And it's just like, the hope there is that you've been accumulating over these times, which is basically when I was and many other people out there were in these sort of periods buying spot Bitcoin. But yeah, these levels are just way too expensive, especially when you go to a stochastic heat map that's this red before the halving. So after the halving, this is acceptable. This is normal. After halving, having this sort of thing a few months after the halving, because Bitcoin's just raging, then that's very normal. But pre-halving, having this kind of stochastic heat map pattern is just way too overheated, generally speaking. So, you know, if you're buying Bitcoin at these levels, then it's probably not ideal pre-halving. There's got to be some sort of pullback at some point, and you can see we definitely had a pullback there. We were trying to act as support here, and we just ranged essentially. So those are the sort of key levels I'm looking for personally, around 34 to 32K. We might not even get there, you know, that's if we're lucky. And if these levels don't really hold, then, well, as you saw before in previous charts, then we've got some lower levels that we could contend with if that happens. But unless there's something really big, I don't think we're really going below this band. And this band coincides with many other levels linked to other indicators, horizontal supports, resistances, moving averages. They all sort of line up around that area. So if we do get a proper pullback down there, then that's really good. You know, if you missed out on buying, you know, around these levels, then that's kind of your next opportunity essentially. So getting a mean reversion from here is normal. And you can see, you know, even here when we got above it again, and then we mean reverted down to the middle band again. So getting a mean reversion from here, it's healthy, because this whole move kind of all year has been pretty healthy, but this huge rally here for where we are in the market cycle is probably a little bit unhealthy. So getting a pullback, a slow bleed down, I reckon at this point is pretty healthy. And that's just sort of where hopefully if we do come down, then that's hopefully we'll just sort of find a bottom around there, maybe track sideways akin to here, or something like this where we just sort of slowly bleed down, and then we start to look at those higher levels. So I think that wraps it up. Hopefully you found this video helpful, and if you did, please give the video a like. If you want more content like this, then feel free to subscribe to the channel, hit that bell notification too, so you get notifications when I release more videos. I don't know about you, but I welcome a pullback in Bitcoin, and hopefully it'll bring the altcoin market down a bit more too, so we can load up on bags with some of the profits that we've taken, if you have taken any, that is, and continue accumulating for the up and coming bull market. I still think that there is a good chance we'll get some sort of major pullback in around Q1, maybe the end of Q1, before we start to print in some higher levels. So we'll have to see if that plays out. That's all just speculation though. We might not even do that. We might do what we did back in 2015, maybe get small pullbacks and just keep running and running and running until the bull market top. But we'll have to see how that goes. So keep safe out there. This is Kryptolytix signing out. Have a good one.